me know. Shout out to Stacy. I love seeing messages like that. When you sent me today, it's awesome to see how you're able to start like really applying this really fast. And Angelica, I don't know how your email got dropped off because I send the same email all the time, so I must have accidentally backspaced one too many times, so you didn't get a chance to probably watch the Fibonacci video. So I'm going to talk a little bit about that tonight again, but definitely watch that. And if you got questions, definitely let me know any day of the week. Make sure I record this. This is the first class. Okay, we did some basic stuff then. I'll send it to you. Let me make a note of it as well. A lot of it's the stuff you're going through in the videos anyway. All right, I'm gonna have to go back and make sure I sketched all the years, Angelica. All right, so check videos. All the videos. All right, if anybody else for some reason kicked off the email list or needs the videos, let me know. All right, so let me know that. What's up, Gary? Sandra's on. Awesome. All right, so let me make sure I hit record on this. All right, so, and again, if you guys have questions, you can definitely jump in. We'll meet you guys for right now. But definitely jump in if you got questions or type it in the chat either way. First thing I want to kind of show you guys is Bitcoin chart, just because Bitcoin is going crazy. We won't spend too much time on it. Where's my share screen? But I do want to show it to you guys so you guys, are aware of what's not just going on, what the news is telling us and everything about Bitcoin, but also, what is the chart actually telling us about Bitcoin? Should we buy? Should we sell? So real quick, Gary, do you have something, or I'm about to meet your mom real quick? There we go. Cool. So Bitcoin, this is a daily chart of Bitcoin. So the last 2 days have been crazy. Zooming in here, let me try to get rid of these grid lines, because grid lines, again, are not support resistance levels. So you don't want your eyes drawn to them. This red doji, and now we have this green doji forming today. And now we're getting ready to open up with this new candlestick on this third day. So these last 2 days in Bitcoin have been indecision days. You got this massive move up to the 11,200 area. Let me grab a little quick line tool here. Make this thick. So we had this massive run up to this 11,300 area. And then in the same day, it was also down here at the 9,200 area. Then today we hit 10,600. And then we had this range down to 9,000. So we're getting these big ranges in the market. And just by looking at the actual candlesticks, we can see that the bulls are not winning the day before yesterday or today, The bulls are not winning and the bears are not winning. We got these long wicks. Now, if we would have had that candlestick from yesterday, that red one with the extremely long wick, and then a bearish day today, we could have definitely started to look for some Bitcoin pullback. But today we got the exact same candlestick. Is just a big indecision. We had the bulls trying to win, the bears trying to win, and nobody won. So if somebody asks you, is Bitcoin going up today or down? We really don't know, because the last 2 days, that open and close prices have been so close together that we don't have any confirmation on which way Bitcoin is really going. Okay. So that's kind of some Bitcoin chart, just kind of basic analysis of it. So we'll see what happens if we can either create another lower low. So the range we really have to look at now is to see if we break out of this 11,300, 11,400. I'm not like being perfect right now. If we can get out of that range, or if we can make a low below this 9,000 range, whichever way this market starts to go, we're either going to see a pullback if we break down, or it's going to keep popping higher if we can break outside of this 11,400 range. So this is the one to kind of pay attention to as the days kind of go on here. Where is my chat window? I see a chat, but I can't find the window. Okay, there it is. Okay. Yeah, BTC USD. Looking at it in trading view, BTC USD. I want to say you can type it into it, it'll automatically come up. Yep. So you can just type it in and it'll come up. If you type in Ethereum, it'll come up ETH USD. So Ethereum's been having a nice move here. Then we had another day, 2 days of just massive volatility in the market for both of those coins. All right. That's kind of the Bitcoin chart. So that you guys can kind of, you know, not let the news influence you one way or the other. You can definitely just look at what our buyers and sellers actually doing. All right, so now let's kind of get to some education material. So I wanted to, okay, make sure my screen's still sharing. Last week we talked about, or on Monday rather, talked about Fibonacci, and then the week before I kind of gave you guys some basics on the other oscillator tools, RSIs, MACD, stochastics, those tools that are very popular tools that are used, and how you can kind of use those as indications of whether to get into the market, whether the market is thought to be overbought or oversold, and using that in conjunction with the actual harmonic scanner. So tonight I'm going to kind of show you, I got 2 examples that I pulled out. This is kind of the first time I actually had to go and look for chart examples to really teach this concept, because I don't want to spend too much time looking for charts. But I'm going to show you how I use the harmonic scanner to actually to see what trades are setting up, and then take the tools, Fibonacci, RSIs, and stuff like that, and find a good case reason to get in these trades. So the first one I want to look at is, I'm going to bring this back and forth so you guys can see it. I wish I could split screen this. I probably can, but it's going to be real small. But the first one I want to look at is the AUD NZD on a 4-hour chart. And I'm going to use some charts that have already happened. So we're basically back testing. This is what back testing is, seeing if our analysis can hold over the test of time. So you definitely go back and do this on other chart pairs that have already had some market movements. But we're going to look at the AUD NZD Australian dollar versus the New Zealand dollar on the 4-hour time frame. And this is when the harmonic scanner gave us an indication to buy. It was right around this June 22nd area. Okay, so this was our buy indication, and it was at 104. I'm gonna go 104.05 was kind of that entry zone that the harmonic scanner gave us. Okay, so again, you could just trade off the harmonic scanner using the entry, using the stop, but you also want to learn how to add some other rule basis to get into these trades and not just trade blindly off, every single trade. Again, the harmonic scanner is an awesome tool in it itself. But, when you want to try to get better entries and better stop losses, tighter stop losses, you can definitely use some of these other tools. So again, AUD NZD on a 4-hour time frame, and we're going to look at this 22 June area time frame. So I'm going to move back over here to my chart. Now, typically, I'm not going to have everything on this chart. Yeah, Aussie dollar, New Zealand dollar here. Yep. So typically, I don't have everything on my chart like this. Like, I don't have stochastics and RSI all on my chart all at one time. I'll kind of put them on there and then take them off as I need them. But just for illustration, I want to have everything on here so you guys can kind of see it all at the same time. Again, cluttered charts just make you do too much over analysis. So this red line I have is the June 22nd, 23rd area. Okay, so that's just what this red line is, just so I don't lose space or place rather. So I'm just going to zoom in on that area. Okay, so we can kind of see this is the exact same chart. It might look a little bit different because it's squeezed in. And then I got these other things on here, but this is the same area we looked at. So the scanner, we'll draw this horizontal line for the scanner. Entry point was 104.05. Okay, this is where the scanner told us to get into the market. Let me add a quick text element here. And put scanner entry level. Okay. This is our scanner entry level. 104.05. All right. Now, what I want to do is look at not just the scanner entry, but I also want to look at the other tools, the oscillator tools. So on here, what I added was the the stochastics and the RSI. So the stochastics and the RSI. If you wanted to use the MACD, you could definitely use the MACD as well, since we kind of talked about that one. All right. So let me get a little more specific on this first time it hit the trigger. So the actual first time it hit this entry trigger was May 31st time frame. So let me grab another red line, and I'm going to come back here to May 31st, which is way back over here. Okay. So again, the scanner entry is that red line. And what we're going to do is take that red line and consider the other factors. Now, if we look at the RSI on this particular time frame back in that late May, okay, let's get that right back over there. Okay, late May, we can see that this RSI is right at that 30 level. So again, if it's less than 30, you're looking for buying opportunities. If it's greater than 80 or greater than 70, depending on how you want to set your limits, you're looking for selling opportunities. And then at the same time, we also see our stochastics is below the 20 area too. It's bouncing between this 20 area. So we have 3 reasons to get into this trade at a specific point. Again, as your guys are starting out, definitely use the scanner entry prices so you can kind of develop that system, and you don't have to overthink getting into trades, because as these oscillators move, they're going to adjust with you. So just because it shows it like at 30 right here, I guarantee you as prices were coming down, this oscillator was probably like around 40 or something like that. So you would have had time to actually get into these trades. So you don't have to try to rush to get into them. And then I'm going to highlight this stochastic area as well. Okay, so we're down here in this buy zone. And then again, waiting until we get to what the harmonic scanner told us, that red line, we have a nice little entry based on 3 confluences to get in, not just a harmonic scanner entry. Okay. Now, if you miss this initial trade, it actually bounced up and it comes back into the zone. So I'm going to bring back over our scanner. All right. So this first area down here that I looked at was right in here in the blue area. So if you miss this initial entry, we see that it hits this entry again 2 more times. Okay. So June 22nd, and then we also hit it around 7 July. Okay. So again, on daily charts, you got plenty of time. 4-hour charts, you got plenty of time to get into these setups. All right. So we're going to look at these other 2 areas. So June 22nd, again, right where I have this second red line, we see that RSI, again, is right below this 30 area, or right at this 30 level. And then if we look at the stochastics, we're actually higher in the stochastics. Okay. So there's something called divergence, and I'll talk about divergence when we have more time. But if you notice, like right here, June 22nd, a couple, okay, hold on. I'm giving you guys the wrong dates right there. So we don't have to worry about divergence on this particular example. Well, we kind of do. I want to teach divergence, but I want to teach the concept first. So we see back here under 20, and then the market starts to pull up, and then we have this divergence. But down here, we have it right above that 30 line. And then again, if we remember, the entry price was 104.05. So again, we have our confluence reasons to get in. So 104, where'd it go? 104.05 right here. So we have plenty of time to get into this trade because you can see that each of these candles is 4 hours. So you had a good solid 2 days potentially to get into this trade before it started to rise up. And then going down to close to the end of July period here, this thing came and touched again. So let me look over here, 7 July. So yeah, right at 7 July. If we go down and look what the stochastics was doing here, below 20. Now this RSI is above this 30 line. So being that it's above this 30 line, you can't really use this as a confluence factor to get into this trade, okay? But there's something that you do have here. Now let me zoom in. Okay. Something you do have is the candlestick pattern. So right here is 3 bullish candles consecutively. So we've identified an entry level, and we also identified a 3 white soldiers candlestick pattern. So that can be used as your third reason to get into the trade. Now, as you trade and you guys are developing your systems, what works for you, you want to stick to the 3 confluences all the time. You don't want to kind of mix up your confluence just to get into a trade. But there's sometimes that you might just see it, maybe this RSI is close to 30, but it's not, a perfect setup. But then you see a 3 white candlestick pattern that kind of gives you a more of a solid conviction to get into that trade. Okay. All right. Anybody have any questions on that particular setup and that kind of analysis? I can't see anybody that joined in late, so I apologize unless I kind of fool with this thing. Everybody good? Just give me a quick yes or something in the chat. Cool. Stacey's good. Gary's good. Awesome. Okay. Yeah, it felt like I was talking for half an hour there. Okay. All right. Maybe we might be done a little bit quicker tonight. All right, so let's look at another one. I want to go and look at USD, JPY, and then we'll kind of do like an open mic, see what questions you guys have in general. All right, so let me, USD, JPY. All right. So here's another one, and I wanted to grab this one in particular because you'll find that not all trades are going to be the perfect trades, or you're barely missing entry or something like that. It happens to me all the time. It happened to me on gold today, as a matter of fact. Is there any particular time to enter using a harmonic scanner? Yes, I'll go over that. As a matter of fact, I'm glad you asked. So like today, I had a gold, I was selling gold at 1290, 1296 or 1293. I can't remember what it was off the top of my head. And gold went down to the 1272 areas. Okay. And so when gold had fell, I was looking to get in the gold at 1270, and gold got down to, I want to say it was 1270.23. So I was like 23 cents away because I had a pending order. I had to go up the road today, towards DC. So I knew I wasn't going to be able to watch it, but I knew where I wanted my entry to be. So I was like just slightly off. Now, if I was in front of the computer, I could have probably, found a better entry to get into it. But sometimes you just don't, you're away from the computer, so you can't really mark up your charts like you want to, on a cell phone. And so I kind of want to use this as an example of how sometimes the patterns are really, really close. And sometimes your strategy might help you not miss this trade. Okay. So this is the USD JPY, looking back at 26 May 2016. And you can see that the harmonic scanner entry price is 97.56. Okay. Now, 97.56 is a nice entry. We're close to that 96.50, nice solid round number. But the lowest this thing got was 99.07. Okay. Now, even 99.00 is a nice perfect entry. But if you had pending order there, you would have missed this nice run up from 99 to 116. That's a huge move on this daily chart. And those are the ones that hurt if you're waiting, and it just never gets there. So we're going to look for to see if we can find some other validations to get in. All right. Now, I didn't go all the way in depth to look to see if this is going to play out the way I think it's going to play out for education purposes, but we'll see. So going to Stacy's question, is there a particular time to enter using a harmonic scanner? The rule of thumb I try to stick to, it doesn't always work, is to wait until the bar closes. So if you're looking at a daily chart, you want to wait until that daily chart bar closes. Do I still have my Bitcoin chart up? Let me bring this over real quick. And I'll use this as an example, just because I know it's here. All right. Let's say, okay, here it is. Let's do this one. This is a nice level of support. Okay, where that red line is, that's a nice level of support. Now, when you're trading, we could sell off of support and resistance. You guys kind of know that, if it gets up to support level, you sell it. Now, if you tried to sell it right off support level here, you would have lost this trade, right? Now, it's not a bad trade because you sold it off resistance levels. Not a bad trade at all. Keep your stops small, keep your losses small, and you will not get hurt. But if you were trading this on a swing trade and looking at the daily chart, if you wait till this candle closes, you see that it breaks this support or this resistance level. So you wouldn't sell. You would see that this broke out and you would look to take the buying opportunity. If you were too aggressive and you using the 1 hour to 4 hour charts, you would get caught up. So I'm gonna switch over to, let's go to the hour time frame here. And look at this. Let's see if I can zoom in without losing it. Okay. So this is the same chart, the same area. Zooming in. And here's where the market broke through, okay? Same resistance area. If we would have sold, we would have sold it and we would have been good for an hour, 2 hours, 3 hours. And then this hour 4, we'd have broke back up and traded higher. And this is the difference between short-term scalping and swing trading. When you're swing trading, taking these positions, you definitely have time to wait. So just wait for the market close. So when the market closes at 5 p.m. here, then you can, get home from work, look at the chart and base your analysis off the last candlestick close. If you're trading the hour charts, then wait until that hour candlestick chart closes and then get into your prices, especially any of you all that have started trading like binary options, European style binary options. If you're not familiar with it, we'll go over it one night. But you definitely want to use that strategy to get into your actual position sizes. Now, sometimes you might just be more aggressive and kind of waiting on us. Look at Bitcoin right at 10,000. Crazy. Sometimes you might be more aggressive because you might see a candlestick pattern forming and you can see it in advance, almost like a game of chess. Then you might be able to get in, outside of that rule, but just wait till the candlestick closes. So 15-minute charts, wait till the 15-minute candlestick closes and then get in hour, 4 hour daily, same thing. Because if you were trading daily time frames and you sold it on an hourly chart, you would have lost this trade. But if you were trading daily time frames and you looked at the actual daily chart, you would have seen that the market broke out of that resistance level. Okay, I hope that answers the question. All right, now let's jump back over here. USD JPY daily chart, 26 May. Okay, USD JPY 26 May. Oh, not 26 May. Yeah, 26 May 2016. Okay. Too far back. Too far back. Okay, there we go. All right. So this is where the entry was trying to tell us to go in. It was actually deeper than that. So we're going to make this a little bit smaller here. And the entry price based off the scanner was 97.56. Okay, 97.56 USD JPY. So anything JPY only goes to 2 decimal places. All right. Now let's see if we can find some analysis to get into this market a little bit earlier so that we don't miss this particular trade. Okay. Now, if we look back here, we see that the stochastics is at under 20. Okay. And RSI here is 30. Now, I know you guys are going to say, well, why'd you draw it way back here under 20 back here, even though this is before the prices actually, you know, got down? This is kind of that divergence thing. I think I want to have to talk about it in this example, really. But whenever you see your oscillator making and going in an opposite direction of the actual prices, it's known as divergence. And divergence are good indicators that the market is about to turn around. It's one of those things where you have to be patient, but it's a good indication that the market is getting ready to turn around. So let me see if I can zoom in, hopefully without losing it too much here. Okay. All right. So we're under 20 back here. Now, RSI, we're fine. There's a couple different times that we see it's under 30. We can start to look for that market to turn around. All right. I got to make these smaller because I want you guys to see the candlesticks, really. All right. Let me get rid of RSI for now. All right. So there's a couple different things that we see going on here. Now, as we're expecting this to go all the way down to this red line, okay? But we noticed that there's a big wick on this candle. This red candle has a big wick. So what does that mean? There's a lot of buyers trying to push this price back up, okay? Whenever I see these big, large wicks, I know there's buyers there. I try to wait. Again, try. As a trader, you get aggressive sometimes and you're like, I can get it now and I'll be good. Be patient. There's a bunch of buyers here from this area all the way down because they push this price up. So what I like to do is when I see these big, large wicks, I'll create this zone. However wide this wick is, I'll just create this zone and I'll wait for prices to try to break down below this zone again, okay? So as prices are coming down, I try to wait for them to come down even further to retest the bottom side of this zone. So what I've essentially done is I've raised my entry price from where the scanner is telling me to go. Now, because the scanner wants me to go almost 150 pips lower, okay? So I'll wait for this first bounce to happen. And then I wait for this second bounce to happen. If by the second bounce this thing doesn't happen, I'm looking to get into a trade. Okay. Now we see here again, the stochastics is well below at this point. Okay. RSI, we're getting close. We're approaching it. Okay. Now, if you get into this trade, you did good. I probably would have still missed this trade because the market is real slow. You see that there's not a lot of action in the candlesticks. When the markets are flat, you'll see this going into the holidays. You don't want to try to trade these flat markets because you just get these little 2 pip, 10 pip little movements that aren't worth wasting your time looking at, okay? But if you were looking to get into this market, you've got to find reasons to get in as that price is approaching the harmonic scanner. If it's in the harmonic scanner zone, you're good. As it's approaching the harmonic scanner, your eyes definitely want to start to light up looking for these entries. All right, so now let me delete this, delete this, delete this, delete this. Okay. All right, now what I want to do is also throw Fibonacci on here. So if you guys haven't had a chance to watch the Fibonacci videos, you'll get it. You'll get it. All right, so let me zoom out. Gotta zoom out far on this one. All right. So again, this red line is our entry price. Let me get rid of these indicators to make these bigger. Okay. All right. So on Monday, we talked about Fibonacci, and that's my main tool that I use to look for these trades to get in. Again, why did something change on me? Okay, I'm on the wrong chart here. There we go. You guys gotta tell me I'm on the wrong chart. I gotta zoom back out again. Hold on. All right, there we go. That's better. I could have used Fibonacci on that last example, but I saved it. So let me draw this entry line again. 97,568. So again, that's our entry of what the harmonic scanner is telling us to get in on. Okay. Now I'm going to draw Fibonacci. And again, if you weren't on Monday, definitely go back and watch it. And again, I'll go into some deep Fibonacci's of why I started at certain areas as well. As we get deeper into it. But again, I want you guys to kind of learn the basics of it, how these tools work. So I'm going to grab my Fibonacci tool. It's the line tool with the F. Okay. And I'm going to the lowest low of this big market move swing up. So we had this big rally in the market, and now we had this correction in the market. Same thing we can start to anticipate with Bitcoin. Go straight up, and then we're going to wait till it pulls back. Who was on Monday? Gee, who was on Monday? I think Sandra was the only one that was actually able to stay on the whole time. Sandra, if you remember, type in the ratio numbers if you remember them, because these ratio numbers automatically appear when you draw Fibonacci. Okay, so there's not a lot of guessing as to where I want to get into the market. These numbers tell me the ratios of the actual market pullback. So again, I drew it from the lowest point on the market up to the highest point in the market. And then you see I have one level here to get in, this second level here to get in, and then I have this third level down here to get in. I don't want it to go over the price, so let me scoot that over a little bit here. And then I also have this fourth level down here to get in. Okay, these are my four numbers that I'm looking at. This very bottom down here, the 100%, is the double bottom pattern. So if it gets back to this price, that's basically a support level again. Okay, that was our last significant area. So this 50% level now, if we look at this, we see that this acts as support as well. So again, talked about Monday, each Fibonacci levels act as major support and resistance levels. We can look back here, you know, that this was a very, very key level in the market. Look how many times prices got here and stopped. And then we can also look just a little bit further back as prices approach this area. This is a very strong level as well before it finally broke out. Now I'm going to go and zoom in on our entry. Okay, I'll zoom in on this entry. Now remember, the actual scanner is this red line, 97.56 as the entry. Okay, as you can see, there's Fibonacci levels here. They're not close to that entry level at all. So there's no validation really to get in at that level unless you're looking at the other type of tools. You can't say Fibonacci here is real close to the entry of the scanner. So those two confluences are kind of working against each other. Okay, let me zoom in. And okay, so now we're zoomed in. Okay, right before the market goes up, we got our red line down below. There are major levels in the market: 38.2, 50%, 61.8%, and 78.6%. These are the ratios that I'm always looking at when I'm using the scanner. Okay, so when I look at this 50% level, we've touched this thing one time, two times, three times back here. Okay, let me change that right there. And then we touched it one more time right here. Okay, if I'm trading Fibonacci, I'm looking to get in on Fibonacci levels. Okay, now the scanner is a good 97.56, 190, 90, 140 pips away. If you waited for that scanner alert, you were going to miss this trade. Okay. If you traded it based off Fibonacci and expecting this market to turn around because you saw the alert on the scanner, then you could have gotten in this trade and not missed out on that big rally up. Okay. And if we also notice, we're again close to another round number 101, real close to 100 because we're looking at that daily chart. Same thing with Bitcoin. Bitcoin didn't reverse right at 10,000, it reversed at 11,000. So always pay attention to that next round number above those big significant numbers, especially more so on the larger time frames. And this is the same thing that happens. We didn't quite get to 100, but we got to 101 and then the market rallied back up. But if we were just trading Fibonacci, we could have just thrown a level in here to buy at 100, whatever the exact amount on here, 180, let's go with. And then the market pulls up off of that, and you wouldn't have missed that particular trade. And then we saw that back here in the past, back on the left, if I were to scroll all the way back here, that this level was real strong previously. I didn't draw my fibs far enough back. There it is. We saw that this level was really solid back here. Okay. Any questions? Let me stop the screen share so I can see you all. Okay. What questions do you guys have? Or did I just confuse you even more? There's so many different ways you can trade the markets and look at the markets. I just hope one of them sticks for you guys. And then whatever sticks, we just kind of go deeper and deeper and deeper into that particular subject. So if you want to use oscillators, you can. They're known as lagging indicators. So when you see those oscillator moves, you have to wait for it to get into that lower percentage area of the actual level. So if it's below 20, below 30, whatever it is, you have to wait till the market gets down there. If you're using something like Fibonacci, it's a leading indicator because as the prices are going down, you already know where it's going. Same thing with the harmonic patterns. It's a leading indicator. We already know where we expect the prices to go. So we kind of just put in that order and wait for it to happen. If you don't use a harmonic scanner, if you don't use Fibonacci, you're always late to the party. I'll kind of go through an example of that. Let me see if I can find one of those real quick. If you guys have questions, definitely let me know. Let's see what Euro USD, since Euro USD is the most traded pair, it's the most liquid pair. Let's see if we can find it over here. All right, and template, and back on screen share. All right, I'm going to. I want to see if I can find something in real time, because the thing with the oscillators is that it's going to happen. You're going to see it happen, but it's going to be because the prices are averaged to get to that oscillator price. Where'd my chat window go? Okay. Sandra says she likes the fibs. Cool. All right. Let's look at, this is Euro USD 1 hour chart right now live. Okay. So let me zoom in here a little bit, and I want to get rid of, all right, I'm gonna get rid of stochastics right here. So indicator list, click on the indicator and delete. That's how you get rid of it. All right. Now, if we look, I hate this because it's going to be average price, and trading in real time and trading back testing is different. Trust me. You guys will see it when you take trades and you're like, how come when I looked at it, it was above it, now it's below it? I'll screenshot, if you guys haven't before, screenshot your entries, and you'll see what I'm talking about when you know, as time passes on, you go back and analyze your trades. But we're going to look at this Euro USD 1 hour chart. Now we see here that the RSI broke over 70, right? So we're looking for selling opportunities. Now we're going to draw this little line so you can actually see exactly where it is, right? And let's go one more candlestick over. All right, right there. So we see that that top candlestick was the last one before prices fell. So if you just use RSI, right, you could have sold off of that. Now let me zoom in one level here. All right. So if we just sold, if you just use RSI, saw it over 70, we could look for that selling opportunity and we would have been just fine. Okay. Now, sometimes you're not going to see this thing spike up and over until it's too late. And I'm going to try to show you on stochastics here, next example. But what I could do is use Fibonacci, because I don't know exactly how far this price will go up once it's over 70. Okay. I think it was Stacy a couple sessions ago talked about confirmation. And so one thing with candlestick confirmation, you would have to wait until you see this red candlestick indicating that, yes, we are going to turn bearish, right? And then the market starts to go down. And right now it's kind of playing in a zone. So if you had got in on this market at the close, so again, we wait for the candlestick to close. Change the color for you all. Let's go purplish. So if we waited for this red candlestick to close, then we would have got in, and you can see as the 1 hours have passed, 1, 2, 3, 4, 5, 6, 7, 8, we're actually in a negative drawdown position right now. So using RSI, waiting for candlestick confirmation, we got in. We didn't get in too late, but we're in later than what we could have got in. I'll put it that way. Okay. Now, another indication to sell with this candlestick pattern is these two together, because the wicks are the same height, approximately the same height. This is called a tweezer top pattern. So this is also a nice sell indication pattern. So as you can see, the market did sell off right after that. So we can anticipate a nice little pullback here to this level, which is a resistance level or support level, to wait, whichever side you're looking at it on, right? So it's a nice little level. So 118.70 level is like a 30 pip pullback. All right, now let's use Fibonacci. Okay, Fibonacci, I want to grab my tool and I'm going to draw it in the direction of the market move from the highest point to the lowest point on the graph. Okay, so my highest is back here. I'm going to start and I'm going to draw it all the way down to my lowest point. Now, doggone it, look at that. It stops right at the 76 level. Like right on it, almost no drawdown. Okay, this is why I love Fibonacci, because I know exactly which prices I'm looking for to get into the market. So if I missed it on this first candlestick, I can wait for the retest of this Fibonacci level. So right at 78.6, I could have had a pending sell order, and the difference between 78.6 level, which is 119.27, until waiting to the close of the confirmation and everything like that, is 118. We'll go at 119. So I actually would have got in 27 pips sooner than this person waiting on a candlestick confirmation. Okay, this is why I love Fibonacci, because you can just get in earlier and your risks are less. Okay, we have to talk about risk management on another session. Some of the strategies on that. I'm going to replace now RSI. Let's throw on something else. I want to indicator list, RSI delete. Let's see what stochastics has for this area. Okay. All right. So here's the stochastics. Okay. Now, again, if you're trading with stochastics, when it's over 80, that's great, but you have to wait for that crossover to happen. Okay, so the crossover happens right here, and you're not going to see that crossover happen until the actual prices gets lower, because the way you calculate stochastics is using the previous price candlesticks. So whatever it's set up for, whether it's 14 candles or 21 candles, whatever like that. So in order for this crossover to happen, you have to wait until the for that crossover to happen and prices to kind of move. So I'm going to grab this vertical line tool and kind of put it right at the cross over. And again, this crossover happens on this red candlestick. So again, you wouldn't have got into this trade at the earliest. You wouldn't have gotten into this trade until after that red candlestick closed. Okay. So again, Fibonacci, you could have had a pending order set there and got in right at that level. If you're waiting for the confirmation in stochastics, you have to wait until confirmation, then you're getting into the trade. So that's why I don't really use oscillators, because you always get into the trades later. Let me clean this up a little bit, show you another example that's staring at me in the face. Zoom back in here. Here we see stochastics, right? Crossing up and over. Again, you're not going to see this crossover happen until this candlestick, that green candlestick, because in order for that crossover to happen, there has to be a positive volume coming into the market. This is why it's kind of hard to teach, and nobody tells you this when they're teaching you it. They just show you, oh, this is all the perfect examples. Not how the market works. As this price goes up and down, I'm going to show you guys on a smaller time frame too real quick. You'll see how the crosses is continually moving. If you pay attention, close attention right now, right here, this is continually moving as prices go up and down. So you have to wait until that candle closes to actually know where that cross is going to happen. Okay. But again, on this one, if you would have took it at the red candlestick or at the green candlestick, you would have got it a little bit later than the people that are taking it just off a support level back here. So if you were using this as a support level and you had a pending order at support in, you would have got a better entry from here up to that first candlestick. Okay. Let me go quickly down to a 5-minute chart so you can actually see what I'm talking about for how these stochastics and everything move. So just kind of pay attention to the red line and the green line. As market goes up, you see that's continue to go up, and it won't be until we get a red candlestick that this actually goes down. Matter of fact, let me jump over to the 1-minute chart. So now you can kind of see it. So as prices go down, then you can start to see it adjust. Now, if this will fake you out, if this price jumps back up real quick, this red and this teal line will turn around and go right back up. So that's why another reason you kind of want to wait when you're trading with any type of lagging indicator is what they call it, okay? Whether stochastics or MACDs or CCIs or momentum indicators, all that kind of stuff. Okay? And then if this pushes back up, you'll see this kind of turn around and go right back up. All right. Any questions? Hindsight is always 20/20 because you already know what the market's going to happen. That's why I try to use real time. It's just real hard to use real time data unless you're like day trading it. Where would you place your stops? If I'm doing Fibonacci, I typically place my stops at the right above or below the next Fibonacci level. So let me jump back out to hourly chart here. All right. Especially if I'm using pending orders and I'm not in front of the computer to watch it. Let me get rid of this. Delete and delete. Now, again, use risk management that works for you based on your position sizes and stuff like that. So going back to our 78.6 example. So if I have now, and I'll show you a losing example here first. If I wanted to sell it and I thought this market had a nice level of resistance at 50, I would have a pending order at 50, all right, and expecting the market to go lower. And then my stop loss would be just above the next Fibonacci level. The reason I do that is so that in case I'm wrong the first time, chances are I'm right the second time, okay? And then if I'm wrong the second time, then I'm not going into a third time loss. That's just kind of my rule. So I would wait until I saw another setup on that particular trade. Okay, so if I sold this at 50 and my stop loss was above 61.8 and it missed 61.8, then my next entry based on the setup would be 78.6. That up 78.6, and then I would have my stop loss just above the 100 level, because now I gave myself room for this first move and a potential sell off of a major support resistance level. That's how I use my stops. Now, depending on your time frame that you're trading on, that range between 61.8 and 78.6 could be a couple hundred pips, If you're day trading it, it could probably be like 20, 30 pip risk. Now, if I'm day trading it really, really hard and aggressive, my stop loss is about halfway between the zones. So if I was trading right at 78.6 and I'm day trading with a bigger position size, my stop loss is about halfway in the zone. If I'm trading hard and heavy and I put a sell at 61, then my stop loss is about halfway between 61 and 78. So that's how I use my stop losses for Fibonacci. And I'll show you one more example. Let's see, AUD, USD. I hope you guys are learning a whole bunch. Even if you don't retain it all right now, I hope it's kind of making some sense. And you can kind of see the power of kind of just learning how to read a chart in general. Let's do daily. Okay, so if I was trading this daily chart of Australian dollar and Swiss franc right here in real time, I would draw my fibs from low all the way to high. I would look for the major support and resistance level. Like right here, we had 50 lines up, you know, with this little bounce right here. So this nice tight zone, but we broke 50. But let's say I was trading at the 50, I would have had my order in at 50 and my stop loss would be just below 61. Okay. I typically don't like the 50 zones because they don't hold as well as I want them to. If the market's real slow and I'm trying to really look for a trade, I'll trade it. 38.2 and 61 and 78, those are my favorite levels to trade. Again, I always take off that 23.6. I just hate that level. That level's just not good unless the market's really going fast. Then you can look to trade that. So if I was trading it, we've already broken 50 here. So if I was trading this right now on a daily chart, I would look for my entry at 61.8, and then I'd have my stop loss just below 78.6. If I want to take a position, if I want to take a bigger position size, I would look to get in at 61.8 and have my stop loss about halfway. That way I don't, you know, kill my trading account taking a big position. But I can take a bigger position if I decrease my risks. Okay? Now if I miss 61.8, I'm definitely looking to get back in at 78.6, because if I look over here to the left, 78.6 was a strong level here and here. So whatever this price was, 72.90. This held twice as the market went up, came back down, market bounced up, came back down. So that held twice consistent there. So I'd be looking to get in back in at 78.6. If it also lined up, if this lined up with a particular harmonic scanner pattern, somewhere close to the 61 area zone was the entry stop loss, I'd definitely be looking really hard at it. And then again, you always look back here to the left and you can see previous resistance here too. So we know both of these levels held really strong or resisted really strong previously. So that's how I do my stop losses with Fibonacci ratios. And now again, if you can use that kind of concept and shrink down your stop losses that might be wider on the scanner, this is a way that you can shrink down your stop losses that might be too wide on the scanner. I mostly trade off the hourly. I look at the daily for the actual setup, the major move. So if I was to look to trade tomorrow, I would let's see. This has kind of already happened. Let me pull up gold real quick. Let's see if gold. I can show you better on gold. All right, I'm gonna have to just do it on TradingView because I don't see it over there. Some brokers have, depending on what brokers you have, depends on what assets can be traded. So in case you ever get an alert and you're like, I don't see that on my broker, then it's just some brokers that just don't offer every single currency pair to trade. All right. So this is a daily chart of gold. Draw Fibonacci's on here real quick. So I'd start from the top to the bottom. So the high was up here, the low was right down here. Now if I kind of zoom in here, which fib did I trade it off of? I might trade it off of this fib. Hold on. Yeah, that's the fib I traded off of. All right, so my initial entry, I got in somewhere right in here when I saw the market retest this. So it came out to 2096. I was like 2096.20 or something where my entry was. And then my stop loss was out over 13. Actually, stop loss was, I cut my stop loss in half because 13 is a nice round number. I didn't expect it to get up there. So let's do this. So my risk was essentially from here to here based off that entry. And I used this as a daily to figure out where I wanted to get into the market. So answering your question, I was looking not to hold this long term as a swing trade, because if we were trading dailies on the swing, we're looking to hold it for a few days, or at least a couple days. I wasn't looking to hold it that long. I was looking for a major bounce off of that that move, just because I am not good at holding positions for long terms. I just can't stand it. So it's just me. Everybody has their little thing. Me, I just kind of know what I'm like. I'll take my money and then I'll look for another setup. So daily is what I was looking at. I was looking at the fib on the daily, but I actually traded this on an hourly chart because I knew I wasn't looking to stay in long. So once I saw this consolidation area right in here, that's when I was looking. That's when I actually got in, because I knew it was going to retest the fib at least 2 times, right? So it got up here the first time and I missed it. This second time where it literally for 4 hours in a row, like played in the same area. Let me see if I can zoom in real quick. So 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, this thing touched 1296 and could not break it. All right. It didn't. It failed to break it back here, failed again, 6 times, it failed again, 7 times, 8 times. This thing could not break through 1296. And then if you look at the actual time down here too, this is at market close. So I was looking at the market close to get in so I had a couple of different reasons. Like I said, we can go real in depth on some of this stuff on like how to really get into it, but I looked at the daily fibs and traded it off the hourly to try to get the closest I could to 1296, because I missed it the first time I got up to 1296 and it was starting to come back down. So I really just had to wait for this thing to get back up there and retest 1296 again. So, ooh, I'm tired. I don't know about y'all. What is Bitcoin doing right now? BTC USD. So Bitcoin was at 10,000 while we were teaching. Now it's at 9,900. You can't predict Bitcoin right now. It's just too volatile. But Bitcoin, real quick, I'll show you. Bitcoin, if you traded the fibs, low to high is down here initially. So it came from this high down to this low, pulled back up, stopped right at 61.8. If you had a pending order, sold it at 61.8, had a nice sell-off here. Bring it down to this next low down here, right? And I'll bring this high down. So we're looking at this move, looking at this smaller down move right here. It pulled up 61.8. It failed to break it. And now it's trying to come back down here. I wouldn't have traded it yet. If I'm watching this live, I still wouldn't trade it yet. I'd wait for this thing to retest 61.8 again. But you can see these levels hold strong. And then again, if we looked at the 4 hour on this thing, that was chart I was looking at. Okay. Yeah, a little bit easier to, a little bit easier to see on the 4 hour. But when that sell off happened the other day, I missed it. But if you look at the Fibonacci there, that nice little down move from the high to its low, wait for the pullback. Pull back right into 61, and then it sold off from 61 back down into support level again. Okay. And then I could talk about this for hours. Last thing, you guys type in questions if you got anything. We'll look at the bullish side. how far could this thing potentially pull back? So if you want to buy Bitcoin, you know, you don't want to buy at the top. You just, I was like some people too. I'm like, Dad, I want to get in, but I have to wait for the pullback, because the last thing you want to do is buy at 11,200 and that thing pulls back on you. So let me kind of zoom this in quick. All right. Fibonacci's are awesome. I'm gonna convince you guys to use it. I'm gonna try to convince you guys to use it. All right. Try to get this so you guys can actually see it better. I think that's about as good as I can do. So I'm going to draw a fib from the lowest low on the swing right here up to the highest high. Okay. And it stops right at 38.2. Zoom in for it. Okay. So it stopped right at 38.2. So if you had a buy order in at 38.2, that was right around that 9,090 mark. And then you would have been up $700 on Bitcoin. Can't see. Let me see if I can make it a little bit bigger for you. There we go. So I drew my fibs from that low all the way up to that high. Wait until it gets back to a major fib level. Market comes down and closes. Tried to break through it, it couldn't. Tried to break through it again, and then it popped up. Oh, I'm not screen sharing? Oh, gee. All right. Let me zoom out. Anybody that jumping on the 8 o'clock session, they're just gonna have to wait a second. All right. Let me delete. All right. So Bitcoin. All right. Grab my fib level from low to high on the bullish side. And the fib level 38.2. Market stops right at 38.2 and bounces off of it. So this is the 4-hour chart I'm looking at. All right, so low of 5,600 area up to 11,400 where it got. Pending buy order right at 38.2. Held real solid. Go down to the hour time frame, and then we can kind of see what it did on the hourly. Once it got down there, whenever you see a candle like just dead stop on a fib level, that's a good indication. That's a real strong level to hold. And you can see that up here when we got to 10,000, it bounced down. Now it's bouncing down off of 10,000. So you can trade fibs all day long. You're not going to be right every single time, but you know, if it's going to go to a level and you put a stop, you know, to give yourself some breathing room, you can let this market go down, adjust your stop loss to break even, and then have a free trade. All right. Let me go back and show you guys what I was showing you that wasn't showing. Was the opposite side of this trade. So if you were on the short side of Bitcoin yesterday / today / right now, matter of fact, too. Okay, try to make this as big as possible. All right. I hate the volume down here in TradingView. All right. So this was the high we got up to, right? 11,400 back here. People were selling off Bitcoin like crazy. So if we go from the high to the low and kind of brought it over, and I'm going to stop right here. So if you were looking for a sell signal, so let's say you saw the market going down, you're like, I want to short Bitcoin because I see it just dropping like crazy. If you missed the short at the top, wait for the pullback. This pullback pulled right back into 618, stopped right at 618. 618 is the golden ratio. Please memorize that number. And then the market fell off, right at 618. If we look at the next move in the market, we'll just adjust this to the low and adjust this to the swing high. So we're looking at this particular move in the market. Market dropped off again, pulled back up, pulled right up into 618 again and stopped. And now it's selling off the 618 level. Again, if you had your stop right above the next fib level, 78.6, you got in, get stopped out. Now that you're in some profit, you can move your stop to break even, or you can let this go a little bit further down while it's still moving. All right. So you can use fibs on anything, stocks, currencies. Trying to think of a random stock. Let's look at Walmart real quick. See, I could teach this all day. I try to put myself on a timer. I've been good all week, but you guys keep pushing me to teach. Here's a low, the swing here, low to high. I'm gonna zoom in real quick. I see fibs everywhere. That's why I trade it so often. So whatever you see, definitely will learn those skills and really push it. All right. So I do from this market swing to this market swing. We see this is a bullish move. So we're looking to take bullish positions. Okay. We missed the initial move. So if you would have got it back here, awesome. But if you missed the move and you know it's bullish, just wait. This thing comes back into 50 level. Well, it comes back into 38.2. So if you were short-term trading this, you could have put a buy order right at 38.2. No guesswork. You know exactly what that price is. The market bounced off 38.2. Okay. Then again, if you were looking at the 50 area, the market bounces right off the 50 area. One time there, almost gets there, so we won't count it. Again, right at the 50 level there again, and then it just skyrocketed off of that. Then you're also playing a nice little double bottom pattern here, right? We tested 50 one time, we're testing 50 again, and then it shoots up. So no guesswork. Do I have to buy at 75.55 or 74.20? Like Fibonacci tells you, 77.659. That's the area to look to buy at. Okay. So using that in conjunction with some